Saturday, March 7th, 12:26 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Hope you had a good week. Going to discuss U.S. stock index, Dow Jones Industrial Average. It's a stock index. It's one of the oldest stock indexes in the United States. Some people misunderstood it, past and present. So I'll explain some further detail on it. That being said, this past week, the stock index, Dow Jones Industrial Average, made a new low for the year. So we'll look at the 30 companies inside the index and see how they're performing. Again, the Dow Jones Industrial Average is a stock index, 30 companies, the 30 largest public traded companies in the United States. Each one's worth hundreds of billions of dollars, or hundreds of millions, hundreds of billions. Periodically, the company that manages the index changes companies out. Companies that are underperforming take off and replace with new ones. When this index was first created, before there was a NASDAQ stock exchange, this index only had companies listed on the index that were in the New York Stock Exchange. And not too long ago did they start adding companies from the NASDAQ 100. That changed this index performance. The NASDAQ 100 index is only companies on the NASDAQ Stock Exchange. This index in the past was heavily weighted with banks. Still is pretty heavily weighted with banks. But since they put the NASDAQ 100 technology companies on this index, those have a big influence on this index weighted average. So the Dow Jones Industrial Average, the cash index, trades from 9:30 a.m. to 4 p.m. New York time during trading hours. If you want to participate in trading the Dow Jones Industrial Average, and I say the Dow Jones Industrial Average because there's other Dow indexes. You can check that out in my other videos. The Dow Jones Industrial Average stock index is part of the big S&P 500 stock index. Yep, that big S&P 500 stock index that I have videos on. This index is part of that index. So since this trades during New York stock hours, 9:30 a.m. to 4 p.m., you could trade options on it during regular trading hours, but you cannot trade the cash index. If you want to participate in trading the cash index, again, here's the cash index, the stock symbol, $DJI. Well, Sunday night, the futures open. That's another financial market. Again, this cash index doesn't open until Monday, 9:30. But I could participate because I have an account with brokers to trade futures. This symbol, /YM, is the symbol for the Dow Jones Industrial Average that trades in the futures. It trades more days, more hours. Not all brokers will have access to it. So this is a 15-minute chart for the past 5 days. And these dark gray areas, those are the extended hours. When the regular market closes, this continues trading overnight. And in the morning, it continues trading with 1 hour break from the 5 p.m. to 6 p.m. And again, opens back up Sunday. So that means they close Friday, 5 p.m., reopen Sunday evening. Opportunities. But if you want to trade during the regular trading hours, the Dow Jones Industrial Average, there's a stock index. Again, stock index. I didn't say stock ETF. The stock index, symbol DIA. The stock index existed way before there was ever stock ETFs. So the major stock indexes, such as the Dow Jones Industrial Average, has a stock index you could buy. It closed Friday at $475.23. So instead of buying the 30 individual companies, which I'll show you momentarily, you could buy this stock index. Again, this is a 30-minute chart. You can also trade options on this stock index. You can also trade options on the futures, as well as the futures contracts on the YM. And the cash index here, you could trade options on it. This is a 5-year chart. Each candle's a week. Top right, That was the high of the year that the executive branch was all taking credit for when they were saying the markets were new highs. Well, again, here we are, new lows for the year. And look how that big week occurred. It's the biggest trading range that we made all year long. Trading range means the high and low of price action. So again, all the E's below the yellow horizontal line and above the yellow horizontal line represent weekly candles for the whole week. And again, look, all these weeks that occurred since the first of the year. So again, new low for the year, extremely red bearish candle, broke below all this consolidation and closed below it. Very bearish. Used a lot of energy to go down there. A little wick on the bottom, some buyers stepped in. Maybe we'll have a bounce. Again, past 5 years. Here was the low. The year 2022. Above that, 2023. Yep. So again, we've been going higher high for the past few years, and each administration has been taking credit. Nothing completely different from the current one taking credit. Yep. So key levels, see this green horizontal line? That was a key level. When we had a markdown again, this was distribution. Smart money was selling it. And then we had a markdown phase, a bounce, a markdown phase down here. Massive consolidation. That was accumulation. And then a markup phase. Got it? Markup phase. Smart money was buying. Again, distribution. The end of the prior administration and the start of the new administration. Again, smart money was selling. And that new administration took the first year, second term. Huge sell-off. You have deep retracement, which broke the lows of that prior administration. That's not a healthy market. And then took a long time to get back up here, retest those highs, consolidation, break above them. Again, key levels I have labeled here, those green zones. See these blue horizontal lines? Right there, that low, July last year and November last year. Those are swing points. Potential key areas on the downside. Key levels I have labeled here. Trends could last for a long time. See the trend from here? Bottom there, momentum to the upside. And see the trends here? Long time going down and retracements up, down, but the overall trend was down. And then it took a long time from this high to go back up. Me, I don't invest in this stock index. There are better ones to invest in, ones that are better leaderships, better liquidity. Yep. So now let's go to look at the 30 companies in alphabetical order, stock symbols. When I cue in each one, you'll see the stock symbol and the name of the company. Just take note. Again, the low 2022 and this year made the new high. And currently we're at the new low for the year. Let's look at the individual companies now. Apple, we still haven't taken out the high of last year. So this is even more bearish than the stock index. But we haven't made a new low for the year yet. Here's the low this year. Got it? But overall, this is more bearish than the stock index because it hasn't made a new high yet. That's concerning. Get stock symbols here. Stock symbols up in here, top left. That's the price it closed at Friday. Well, if you see 4 letters, that means that comes from the NASDAQ 100. Remember I mentioned to you? I schooled you. So again, this stock index, this company has been trading on the NASDAQ for a long time, and then it got put into the NASDAQ 100 stock index, which is still part of that. But it has not always been on the Dow Jones Industrial Average. And here's Amgen. It's performing better than Apple. right here, we made a new high for the year. Big difference. This company made a new high for the year, outperforming Apple, outperforming the stock index. Amazon. Here's the high of last year. We still haven't taken it out yet. Now, earlier in this year, it made this new low. Again, Amazon from the NASDAQ 100. See this orange vertical line? That's when this was added to the Dow Jones Industrial Average. Yep, the prior administration, it was added. The administration doesn't have the policy to select what goes on here and off here. It's an independent company for profit. And this is a gap. It didn't get filled yet. Very close, but didn't get filled yet. So again, we have two companies that come off the NASDAQ 100 that are underperforming the Dow Jones Industrial Average. And those are technology companies. In a healthy economy, technology and the banks should be doing leadership. That's not occurring here, you see? And it didn't just happen overnight. It started the prior year. American Express, again, financials. Last year was the high. We haven't broken it and made a new low for the year. See what I'm showing you here? Technology, the banks, they are underperforming. That's not healthy for the economy. It didn't just happen. The situation awareness, those on my Patreon page, we knew about this because I share with it. But Wall Street, their job is to take the most amount of money from the most amount of people fast as possible. Boeing, yeah, way below the highs of 2021, below the highs of 2023, below the highs of 2024. Well, we made a new low for the year. But that's Boeing. What do you expect? Don't worry. They get a lot of money from government contracts, not just the United States, other countries. Boeing makes products for the military and civilian use. And in Europe, the ones that make airplanes, Eurobus, they as well make commercial airliners. Thank goodness the United States still has the capacity internally to manufacture commercial airlines and other products. That's for national security. Caterpillar. Yeah. This year did make the new high for the year, but big sell-off. Salesforce. So way below the highs of 2024. Really struggling poorly. Again, below the highs of 2024. Very close to the lows of this year. Not good. Cisco Systems, another company from the NASDAQ 100, where it did make a new high for this year. Huge red candle. Chevron. They deal with the energy industry, if you don't know. And look what it did today. I'm sorry. Look what it did this past week. See these yellow horizontal lines? It took out the high of 2023. There was 2023 all the way back there. Zoom in some more. It took out the high of 2022. So again, 2023, top left. Above that, top left, 2022. Yep, new highs for the year. This year. Big difference than technology. This is not healthy economy. This products and services they provide add to inflation. Disney, way below the highs of 2021. Look, new low for the year. Buying on the dip, I wouldn't want to touch this. Way below the highs of the prior years. Buying on the dip, there's better stock indexes that are outperforming the single stocks. I talk about those in my other videos. Goldman Sachs, another bank. New low for the year. Home Depot, again, underperforming. There's a high 2024, 2025. Yep, big sell-off this week too. Honeywell made the new high for the year. See, this past week made a new high for the year and then sold off. It's outperforming the stock index. Remember, the stock index made a new low for the year. IBM. Last week was the low of the year. Now we made a higher high, higher low here. But we're still below the highs of last year. It's really weak. Johnson & Johnson made a new high for the year. It's amazing. See, these companies are making new highs for the year. They're not technology. They're not the banks. JP Morgan, new low for the year. Coca-Cola, last week made the new high for the year. McDonald's, new high for the year. So, fast food chain McDonald's is in leadership role? Really? When's the last time you saw that? That's not good. Nope. 3M, very close to making a new low for the year. Merck, look, below the highs of 2024, big sell-off. Microsoft, another technology, still below the highs of 2025. So you see a lot of these technology companies haven't even taken out the highs of last year. That being said, the financial institutions that manage other people that volunteer not to own up and be adult and take care of their own money, but outsource it and pay a fee, regardless if they're making or losing money, pay a fee to money managers. Those money managements have done what's called sector rotation. I have other videos that talk about that, show you the good insight. Retail, Nike, yeah, underperforming, way below the highs of 2021. New low for the year. Again, another technology here. See the orange vertical line? That's when it was added to the Dow Jones. It was added, prior administration, current administration, it went down, just like the market did, because the word of tariffs ran up, made a high of last year. We still haven't taken out the high of last year. Nope. Under distribution. Procter Gamble. Yep. Look, way below the highs of 2024. Huge sell-off. Sherwin-Williams, the paint company. Yeah, they were added to the stock index too. I was not a happy camper when that was added. Nope. I personally believe there should have been better selection. Again, I don't own the Dow Jones stock index, nor do I have a equity stake in them. Yeah. So way below the highs of 2024, below the highs of 2025, big sell-off. Another financial, the Travelers, made a new high for the year. Isn't that interesting, Travelers? So they're doing better than the other banks. United Health, not surprised. There's the high, 2024, 2025. Yeah, huge sell-off. This huge consolidation off that big move down, not healthy. Visa, the credit card company Visa, again, below the highs of last year, and the current momentum's down. Now we're looking at Verizon Communications. Look at that, underperforming. Way below the highs of 2019. Yeah, it made a new high for the year. Underperforming prior years. So AT&T, stock symbol T, used to be on the stock index. And I remember when they took that off. It changed the weighted average on this index. And Walmart, big retail. So if you look here, excuse me, these past years down here, real tight consolidation. Going to zoom in some more. Here's the low of 2022. From that 2022, see that green line up there too? Just went really slow grind, retracing. Here's a low also. Okay, this is Walmart. 2023. So massive consolidation out here. Took a long time, close to a year and 3/4, to even get back up to that swing high. And then here, consolidation. And this low, 2024, ran up, broke that swing high. It had a strong gap up to the upside. So this already started to take off. Walmart, back there. See? 2024. Again, they got more market share. They made more profits, more gains, ran up. So the momentum started early. Again, prior administrations. Talk of tariffs was here. Current administration sold off, run up. Now we have this big consolidation here. You may see more distribution. I'm pointing this out, the time frames, just to show you that the market has up and downs. Prices fluctuate, common sense. And you have people misunderstanding and taking all the credit when it goes up, but not only up when they have policy to make things go down. So that being said, instead of me taking higher risk and investing in individual companies, which I told you, some of them get taken off this index. And what happens is, when they get taken off the index, actually, I'll show you one here. Let's put AT&T on. When they get taken off stock indexes, the financial institutions that have them in their portfolio, they need to liquidate them, sell them to buy the new company that's coming on here. So when they buy the new company that's being replaced, it adds more buyers in that, bringing more price up. And also there's a Walgreens that used to be on here. It's WG, I'm trying to remember what the stock symbol was. Anyway, Walgreens used to be on here. Again, a lot of companies used to be on here. So you want to be diversified and be in a stock index. Well, there's other ones than this. And you just saw, I showed you, new low for the year. Showed you the individual stocks that are way below the prior year highs. Well, I'll finish this off here. U.S. stock market has 11 sectors. Those 11 sectors have stock ETFs. You could invest in those individually and you could outperform the stock indexes. I've shared that in my other videos. And if you look at the one I just published past weekend of the year-to-date leadership, good selection to look at there. Thank you as always, Ben. Just a little time. That's it for the video. Thanks for watching.